Jay, good morning to you. It's been a while since we've spoken, but the last time we did, you were optimistic that a phase one deal or some kind of a trade framework would get done. Do you feel as though the optimism that you had was justified, knowing what you know about this agreement today?
So good morning, Dom. Yes, I actually am very optimistic, and I think manufacturers are extraordinarily pleased that we've been able to complete phase one. We'll obviously see all the details as they're released, but the good news for manufacturers is there's a key priority that has been addressed in this, and that is enforceable rules regarding intellectual property theft and holding China accountable. So we're very pleased about that. We're looking forward to working on phase two because there are a lot of other issues that still have to be addressed. But I think it's pretty safe to say this president has accomplished something that no other president in the last 30 years has been able to do.
All right, so let's talk about some of the factors you just mentioned. You're happy because of the measurability and enforceability of these agreements. What you mentioned, you alluded to the idea that there is still work to be done.
Sure.
What exactly then needs to be done for this to become an even more permanent and substantive trade deal?
Yeah, I don't think we could have expected everything to get resolved over the course of a few months. But I'll say even 2 years ago, the National Association of Manufacturers asked the president, the administration, U.S. Trade Representative Bob Lighthizer to get China to come to the table and to get an enforceable trade agreement done and completed, because that had never been done before. We have two very different economies. We have a market-based economy here in the United States. We have a command and control economy in China. Those two systems were not particularly compatible. And as China was beginning to dominate the world economically, we knew that if we didn't get these rules of the road established, the United States would be left in the dust, so to speak. So in addition to intellectual property protections, we were worried about the forced transfer of technology, counterfeiting, dumping, any of these non-market distorting practices that China has engaged in for many years. We want to see all of those addressed. Over time, we understand it can't be done today, but this is a great first step. This should not be considered anything but astounding at the magnitude of the progress that we've made in this area.
Jay, not all of your constituents in terms of the industrial and manufacturing sector are benefiting as much given the current state of play. We know manufacturing has some headwinds to battle through. How do you address folks, say, in the steel industry versus those who are working in aerospace and defense? How exactly do you go to those different types of peer groups and say this is a better deal overall for everybody involved?
Well, I think the bottom line is China is at the table. China hasn't been at the table until now. And what we've seen is a consistent pattern of China distorting markets, particularly in steel and other commodities, where they oversupply and they dump their products into the market, and it drives prices down. That hurts American workers. As we are able to get China to understand that these practices are not just bad for the United States, but they're bad for the entire world. That doesn't help China as they have emerged as one of the most profitable and successful economies in the world. So they're starting to see, I think, that their practices are harmful not only to other parts of the world, but to them as well. And we need to keep making that point. We need to keep pressing it. We need to keep pressing for even stronger reforms in the future.
So, Jay, what we're showing viewers right now, I'm not sure if you can see it, is a chart of U.S. Steel. We're using it as an indicator. Over the last 2 years, this is a company that's lost almost 3/4 of its value during a time when steel should be trying to find some kind of a bottom here. Is there a hope in your mind that we can have a manufacturing and industrial renaissance in the United States, given what we've seen with phase one coming up and then what we can get with China in a phase two or beyond?
Yeah, I absolutely do. And I think you're actually seeing the beginning of that. If you take a look at the NAM survey that we produce every quarter, we've been doing it for over 20 years, manufacturing confidence over the last few years has been at record highs. Now, that number actually slipped in the second and third quarter of last year, and it was based on two factors. Interestingly, the number one factor for manufacturers has been finding a skilled workforce. And we have 500,000 open jobs in manufacturing, and it's why the NAM has created is launching our Creators Wanted campaign, which will be taken across the entire country this year. The second big issue was trade uncertainty. So think in terms of the USMCA trade agreement, think in terms of the China deal. we've got both of those issues resolved. USMCA, we hope, will pass the Senate in the next few weeks. The China trade deal being signed today. I think you're going to see an uptick in manufacturing confidence in the first quarter of 2020. That's good news. That means more investment, more job creation, increased wages and benefits. We, of course, have to see what our manufacturers say, but we feel pretty good that this is going to lead to some pretty strong confidence measures.
All right, Jay Timmons, you've got a big day ahead of you. You will be at that Phase 1 trade agreement signing. Jay Timmons, the CEO of the National Association of Manufacturers, thank you very much for your thoughts this morning.
Thank you.